Howdy, everybody. Welcome to Liberty Call. Today is Thursday, June 20th, 2024. Hope you're having a fantastical day. It's my granddaughter's second birthday. She's a little munchkin over in South Georgia, just north of Jacksonville. So I sent her a note to mom, and I'd send it to my son, but he never reads anything I ever send, so she'd never get it. So I always send it to my daughter-in-law because I know she replies within about 10, 15 minutes. So she's a good one. So anyways, hope you're having a fantastical day. It is another beautiful day here in Colorado. Not quite as, nice as the last couple of days. The temperature's back up into the, high 70s, low 80s, but it is summer. So anyways, if it is your first time watching a Liberty Call, if you could do me a favor, give me some thumbs up, a like, a share, subscribe, a follow, and hit that notification bell because I say smart things maybe twice a week. So you got to tune in every day for me to say something intelligent. Okay. All right. Gosh, Astros are playing a day game today. They're up in Chicago playing the Chi Sox, and they are in danger of losing the series. They lost the first game, won yesterday pretty handily, or last night, and today's getaway day, and they're down 2-3 or 3-2 in the top of the seventh. So it's just, this is the worst team in baseball, and they can't get their crap together. So anyways, I don't have a lot of faith the Astros could turn it around, but it's been a rough season already. All right. Well, you didn't come here for Astros news. You came here for the financial news. So let's get into it. Dow Jones was up today, 0.77%, 299 points, closed at 39,134. The S&P 500 was down 0.23% today, 12 points, closed at 54.74. NASDAQ down 0.81%, 144 points, closed at 17,717. The VIX was up 6.81% today. It's at 1333. Canada up 0.3, Brazil up 0.2, and Mexico down 0.07. So yeah, I was, watching the charts. I was doing a lot of, let me pause this. I was doing a bunch of meetings or preparing for financial plans and stuff today. And I just, kept glancing over at the other screen, looking at the chart. And I'm like, gosh, why is it the Dow is running, which has kind of been the opposite. And the NASDAQ and the S&P are like in the toilet today. So I don't know. If growth stocks got some bad news that I didn't see in the headlines, or something we're not going to cover. So I'm not totally sure why technology took a breather today. So all right, let's get back to it. All right, starting out with Europe, Germany was up 0.95%, the UK up 0.82%, France up 1.34%, Netherlands up 0.98%, Spain up 0.94%, Italy up 1.37%, Switzerland up 0.42%, and Portugal up 1.67%. Russian exchanges, let's see, one was open. The MOEX was open. It was up 3.17% today. RTSI is still closed, it looks like. And the overnights, the Nikkei in Japan was up 0.29%. Australia flat at 0. New Zealand up 0.67%. In China, the Shanghai was down 0.42%. The Shenzhen component down 1.63%. China A50 down 0.26%. DJ Shanghai down 0.72%. Hang Seng down 0.63%. And in one bright spot, the Taiwan weighted was up 0.85%. All right. Good stuff. Good stuff. Let's get into the market recap. S&P 500 turns lower after topping 5,500 for the first time ever. The S&P 500 fell on Thursday after briefly hitting the 5,500 milestone for the first time as NVIDIA's decline dragged down the broader tech sector. NVIDIA saw its stock drop by over 3%, losing its position as the most valuable company to Microsoft. NVIDIA's market cap fell to $3.26 trillion, just below Microsoft's $3.31. So yeah, they're fighting that out. Who can have the highest market cap? Who's the most profitable? That's what I care about. So let's see here, just below Microsoft's $3.31 trillion, with Apple remaining third at $3.22 trillion. Conversely, AMD rose 4% after Piper Sandler highlighted the chipmaker's promising outlook for the second half of the year. Super Microcomputer and Dell Technologies traded flat despite initial gains following Elon Musk's announcement that his AI startup, xAI, had enlisted the two companies to help build a supercomputer. Is that like the supercomputer from Westworld? I don't know if you watched that. That was a pretty decent show. I think it was the third season where Rehoboam, I think that was the name of the supercomputer that was basically running the world. Anyways, got off topic there. So jumping back in, other news, Accenture stock jumped over 7% after the IT services provider forecasted annual revenue growth above estimates, driven by the growing adoption of artificial intelligence, which offset sluggish enterprise spending. If I could stop here, AI is helpful. I mean, I use it for some things. I mean, like building my summaries for when I do these broadcasts, do artwork, things like that. But there's a bit of a learning curve getting it to actually do what you want it to do. So it's not the easiest thing in the world to get to work. So. All right. Trump Media and Technology Group fell 13%, adding to Tuesday's 10% losses after an SEC ruling allowed investors in the firm's warrants to swap their holdings for shares, potentially diluting longtime investors. Winnebago stock dropped 4% following disappointing fiscal third quarter. Is it third quarter? Probably second quarter earnings, with high interest rates deterring buyers. Other economic data and Fed commentary. Economic data indicated a slowing economy with initial jobless claims rising to 238,000 above the expected 235, and housing starts slumped 5.5% in May. Several Federal Reserve officials expressed caution about the expected rate cuts soon, wanting more evidence that inflation is under control before easing monetary policy. Minneapolis Fed President Neil Kashkari mentioned it could take up to 2 years to bring U.S. inflation back to the Fed's 2% target, citing that current wage growth is too high to achieve this goal immediately. Yeah, so all these folks, the last year or two who've been like hoping and praying and talking in the financial journalists, trying to wish it into existence about these rate cuts. It's like, why? I mean, everything's more expensive. Why would we cut rates? Nothing is slowing down at this. I mean, yeah, it's kind of sluggish, but nothing is really, darn it. He dropped the ball. Ooh. I think we got the lead. Do we? All right. Anyways. Nope. I think it's just tied. Oh, no, we do. 4-3 Astros. Way to go, Chazzy Fizz. Where was I? Okay. Yeah. We already finished that article. Up next, get distracted with the Astro game. Up next, data regarding May housing starts from our friends over at First Trust. This was done by economic analyst Nate Gurzy. Let's see what he has to say about the housing situation. Home prices and rents remained elevated due to insufficient home construction and rapid population growth fueled by lax immigration enforcement. Yeah, I bet if you tossed out the 50 million illegal aliens in the country, you probably have a lot of freed up housing. I mean, granted, they probably don't live in the nicest areas, but, Anyways, several factors contribute to the housing shortfall, including stringent government regulations, a low unemployment rate, making it hard to find construction workers, and relatively high mortgage rates. In May, housing starts fell significantly, missing consensus expectations and dropping to their slowest pace since the COVID-19 pandemic peak. This decline wasn't because builders were focusing on completing existing projects, as completions also fell by 8.4%. The total number of homes under construction has decreased by 5.1% this year, a decline typically associated with a housing bust or a recession. The drop in housing activity in May was widespread, affecting both single-family and multifamily units across 3 out of 4 major regions. Building permits mirrored this weakness, falling to their lowest level since June of 2020. Over the past year, single-family housing starts are down 1.7%, while multi-unit starts have plummeted 49.5%. Wow, that's big. Similarly, permits for single-family homes have risen slightly by 3.4%, but multi-unit permits have dropped by 28.8%. I know here where I live, if I go up to the south end of Denver, I mean, they are building like crazy in the Highlands Ranch area, Lone Tree, and then the little town that we do most of our shopping in called Castle Rock. I mean, they've been building like in the little town area. They've been building a lot of those multi-purpose where you got like shopping on the first floor, and then they've got residential apartments above it. I mean, pretty nice. I mean, it's I guess if you want to live downtown in Castle Rock and walk everywhere, it's pretty convenient. There's no grocery store. You got to go to either end of town to get to the grocery stores, but you probably need a car for that. So anyway, jumping back into where I was, the NAHB Housing Index, which measures home builder sentiment, fell to 43 in June from 45 in May, indicating more builders view conditions as poor rather than good. Despite these challenges, there are some positive factors for the housing market. Many homeowners with fixed sub-3 mortgage rates are reluctant to sell. Yeah, like this guy. Pushing prospective buyers towards new builds. Additionally, millennials, now the largest living generation in the U.S., are entering the housing market in force, providing a demographic boost to housing activity. In employment news, initial claims for jobless benefits fell by 5,000 to 238 last week, while continuing claims rose by 15,000 to 1.828 million, suggesting continued job gains in June, but at a slower pace. On the manufacturing front, the Philadelphia Fed Index, a measure of factory sentiment in the region, declined to positive 1.3 in June from a positive 4.5 in May. All right. So, I mean, we're not in recession collapse yet, but things are slowing down. So, like I said, I don't think I've said this before. I don't think we'll get that soft landing. I think there's going to be some carnage. There will be a reason to lower rates. It's just not going to be just because, we've reached some sort of neutral zone in the, in the monetary and credit supply. So, all right. Last up, article from Zero Hedge. A year after a year in recovery, and that's in quotes, the economy is once again contracting. All right. Despite a solid bear steepener today, with macros selling 10-year treasuries, possibly in anticipation of, Nora Chunkin's liquidation, Nomura's Charlie Elliott, God, these names, notes that the bank's treasury desk has seen continued customer buying on both rallies and dips. This buying, especially from foreign real money, Japan, and other officials, has extended into longer durations, as evidenced by the strong 30 and 20-year auctions. This trend reflects growing confidence in the economic slowdown, timely for the Fed's upcoming meetings in July and September, potentially allowing for rate cuts before the election. Again, I wouldn't hold. Again, the caveat is if something bad happens, market goes down 15%, they're cutting rates. I can pretty much guarantee it. Even though I wouldn't do it if I was the Fed president or Fed chair, I wouldn't, abdicate for that. But that's just that's the first thing they reach for in their utility belt. I mean, if Chairman Powell was Batman, and scary if that was actually the case, that's what they would do. Where was I? Today's mixed economic data supports this slowdown narrative. Housing starts and building permits have plunged to levels last seen during the COVID lockdowns, while initial and continuing claims continue to rise. At the same time, the Philadelphia Fed Prices Paid Index moved higher, despite the broader index nearing contraction territory. This combination of factors points to a stagflationary environment. The Bloomberg Economic Surprise Index has tumbled to a 5-year low, indicating the largest downside surprises in economic data since March of 2019. Elliott's analysis shows that the bank's economic quadrant has indicated a slowdown in 7 of the past 8 weeks after spending a year in recovery mode. The Atlanta Fed is expected to reduce its growth estimates, and the key question is whether this decline will be gradual enough to leave the door open for rate cuts at the July meeting, and a likely cut in September. The central bank aims to implement at least one rate cut before the November elections to mitigate potential political and social unrest. Yeah, because that's probably what's really going to happen. They'll probably just do one rate cut, whole 0.25%. Woo! We're saved, and it might give a little boost to the markets, and but nothing changes really. So, all right, well, that's everything I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information's there. I hope everyone out there has a wonderful evening, and I shall talk to you. Yes, you in the yellow shirt. I will talk to you again next time. Adios.